Hi, this is Jana Faison with Jana Sales Georgia LLC, powered by Century 21. And I would like to introduce my guest, my very first guest for my very first podcast, Miss Tracy Wiggins. And I'm going to give it to her to introduce herself.
I am super excited to be here. Thank you, Jana, so much for the invitation to be here. I'm Tracy Wiggins with eXp Realty. I call myself the boss lady of real estate. A lot of people refer to me as a boss lady of real estate because I named my business Boss Moves, brokered by eXp Realty. And I can
What
tell you a
is
little bit.
Boss Moves? What does that mean?
Well, to help someone make a boss move, boss doesn't stand for me being bossy or being this boss babe or boss chick. Boss really is helping people. First, B stands for believe that you can own multiple homes, okay? And not just your personal home, but multiple properties. Overcome whatever's blocking you. Is it credit? Is it information? Is it money? Is it, all kind of things. Fear sometimes blocks us, Jana. And so once we overcome that, God's going to give it to us.
Yeah.
And so we want to sow what we just learned, SOW, what we just learned, so we can better serve our people and our communities. And so that's what BOSS stands for, help you to make a boss move. Believe, overcome, sow, and serve.
Believe, overcome, sow, and serve. Y'all see why she's the first.
Yes, and thank you so much. I'm honored to be your first. What a
No
blessing.
problem. I just thought of you. It just made sense. It made sense. We met at a 5K 2 years ago.
Yay.
The Martin Luther King. It was freezing. It was freezing. It was snowing that day, but we all came out and we still supported the MLK 5K drum roll.
Yes,
so,
it was fun.
And it was very fun. So, but we just linked up there, and so, the rest is history. What I wanted to talk about today is home ownership. In the United States, according to the National Association of Realtors, 65.8% of people own homes. In 2022 is when the statistic was rendered. The other side of that statistic is that African Americans, Black Americans, only own 44%. And their percentage is at 44%. So we definitely still have a gap.
Huge gap.
And what was amazing to me is years ago, Black people owned more homes when they had less money. So what I wanted to talk to Ms. Wiggins about is what our home buying process looks like. What do African Americans need to do to bridge the gap
Absolutely.
in home ownership?
And so as you bring up that statistic, I told Jana, even when we were thinking about talking about this, I think the numbers are actually lower than that. I just do know for sure that African-American home ownership numbers are at their lowest since the 1960s.
Yes.
Devastating, heartbreaking, because we know that we're out here working like everybody else. We are wanting the same things. We want the American dream. And so, Jana, what I think blocks us a lot of times is not being prepared. Or not thinking that they can even attain it. The suppression and oppression of our people has really changed the mindset of us. And so sometimes if you've been suppressed and oppressed, you just kind of just start living life because you feel like even if I try, I'm going to get shot down, And so that's unfortunate and that's very untrue. And so I think for me, I don't know about you, but when I run into this buyer that wants to apply, or I try to convince them to apply, one of the first hurdles they got to get over is credit. Okay. Do you have a lot of African American clientele that does not have the credit in place?
I do. I have a lot of people that are optimistic, that want the American dream, just like every other American wants, but their credit is not where it needs to be.
And so, yeah.
And I just think that we need to start. I think that's one of the first things with thinking about buying a home is to make sure you run your credit. Now, when I talk to my buyers, I don't know how you do it. When I talk to my buyers, I tell them the first thing to do is get pre-qualified.
You're pre-qualified,
You
absolutely.
get a pre-qualification with the lender. You want the mortgage score. You don't want that Credit Wise or
Credit
the
Karma.
other thing, Credit Karma. I love y'all, but we
Can't
want a
trust it.
mortgage score. If
Yeah.
you want a house, you want a mortgage score.
Absolutely.
So talk to that about
Okay.
what your
Yeah, so first, like she said, you want to get with the lender, and that's what the lender's going to look for. The number one thing is that credit. Beyond credit, they want work history. Beyond work history, they want to know what those savings are like.
Yes.
And so, going back to the credit, you definitely want to know where your credit score is. There's been a lot of talk out there about Credit Karma, in that you don't want to be connected to Credit Karma in any way. I don't know if you've heard, but it seems that when people are connected to Credit Karma, they report, when you apply for the mortgage, they report to all your old creditors that you're applying for a mortgage. And so the mortgage lenders have found that it seems like all your old debt jumps up on the report. And we believe that Credit Karma is connected to that. So if you have Credit Karma, we suggest right now, cut it completely off. Cut the app off, disconnect completely.
That is the first time I've heard that, but
Yeah.
they ain't got to worry about me anymore.
Google it, folks.
You don't have to worry
You have
about
to
me
cut
anymore
that Credit
about
Karma
that.
off. But you do have other ways to just kind of get a glimpse overall. And typically, as she said, these systems, whether it be through your credit card, they give us some scores there. Sometimes your bank account. I know my Navy Federal account lets me see my credit score, my credit dashboard, if you would. You're typically off about 20 to 30 points.
Exactly. That's why you want the mortgage score from the lender.
You want the mortgage score from the lender. So whatever you're looking at, just kind of think to yourself, it's going to be about 20 points lower. Okay?
Yeah.
And so that means you need to go up. You have to get yourself with an amazing credit repair specialist. I have an amazing credit repair specialist. I can share the information with Jana, and she can put it in the comments. But she has been great. I've seen her take people from 500 to 700 in 30 days. And so,
Wow.
yeah, very inexpensive. One of the least expensive credit repair specialists that I know is out there. So that's the first thing. We got to get that credit together, folks. I think some lenders can work with 580, but you really want to be about 620, 640, so you can get these programs that they have out there, the 100%
Now,
financing.
let's speak about the credit, 580. 580 will get you a FHA loan, not a conventional. Now, I love FHA. I think it gives a lot of opportunities.
Absolutely.
But what are the downsides to having an FHA loan that you've run into?
Yeah, so conventional will give you more choices. Conventional will give you more flexibility. The FHA loan is a great loan. Like she says, loan program, because we want all Americans to own. We don't care how you get it. Just
Okay.
get it, right?
Get it.
And so FHA will require some repairs. And so when a seller has multiple offers and they have the FHA loan, they have the conventional loan, and they have the cash buyer, be yourself a seller. The seller's going to go for that cash first, because cash is less problems,
Yes.
quicker close. We wish we had the cash, right? And some of you may
Right.
have the cash, so we're here to help with that. But beyond, the next choice is going to be conventional.
Yes.
Because conventional is less trouble.
Yes.
The client, the buyer, can buy the house with a few flaws, few things they can agree to. A few, not major flaws. I got to make sure you understand that. Not major flaws. Major flaws, you need to be a cash buyer. If the house has a few flaws, they'll let you still take it. FHA and even VA are going to make sure that the house is up to par. And so the seller is going to have to make the repairs that FHA may require or VA may require. And so a seller looks at that as, oh God, they may make me do something and I don't want to do it. And it's honorable.
Yeah.
You know what I mean? FHA is looking out for you,
Looking
because
out for
if
you.
indeed you default on that loan, the house is going to come back to them and they want to make sure that house is up to par.
Up to par.
So that's where that comes from. So honorable loan, wonderful loan, great program. VA, oh my God, thank you guys for all your service.
All your
VA
service.
is amazing. But those two loans are going to make sure that the seller that does right by you.
Does right by you. So those are the ups and downs and the awkward parts of being with the FHA. So with the conventional loan, what's the lowest credit score they will get?
I don't know. I think with the credit, I don't do a lot of that. I do a lot of conventional loans, don't get me wrong, but I don't do the numbers. I think about 600, 620. I think 620,
I think it's 630, and I think it's last year was 630.
630,
So I don't
okay.
know if it's gone up or down, but I know that you have to have at least a 630, which is really doable. But keep in mind, the higher your credit score is, the better your interest rate will be.
That's right.
And people are really up in arms about
rates.
the interest rate. Let me be clear about how I feel about the interest rate. Okay? and this. I want to be your economist of choice. So listen to me. Marry the house, date the interest rate.
That's right.
What do I mean by that? I mean, we're going to fall in love with the home, but we're going to date the interest rate. So if you get an interest rate of, I don't know, 7%, the interest rate goes up and down, up and down, up and down. When it goes down, what do you think we should do when it goes down? Refinance. So you get back with your mortgage specialist or your loan specialist, and you say, I want to refi.
That's right.
And then you will change it. Maybe it'll go down to 1%.
Yes.
You better get on down there to them and get that application going. Marry the house, date the interest rate.
And I say also, what is the interest rate on renting?
100%.
100%.
Girl, give me hands on that.
So when
Your interest, you are paying 100% sign of interest when you are renting a house.
That's right. So I would not be worried about a 7-8% interest rate when I'm paying 100% interest. That money is going to a sack with holes in it. So it still is your best interest for you to be a homeowner, even at an 8% interest. Because let me tell you this also, a lot of sellers are really helping, Jana.
Yeah.
A lot of sellers are helping you buy down your rate. So when they help you with your closing costs, sometimes, when we write in our verbiage, this assistance from the seller can go to our closing costs, prepays, or the buying down of interest rates. So that's another option as well. So you can buy it down. It may cost a few thousand to buy it down, like 1 point or so, but just know that's an option as well.
And I believe that with the discount points, it's about $1,000 per point, and it is invaluable.
Yes.
Speaking of discount points, how do you feel about NACA, the NACA program, NACA?
So I've only had one experience with NACA. Okay. And for me, at that time, it was the heavy selling market where we had the multiple offers and stuff. And at that time, it was not the best choice for a buyer because the process is extensive.
Yeah.
And so not only do you, as a buyer, have a right to do your own inspection, but NACA wants to come in and do another inspection. Yes. And the typical seller don't want to wait like that.
Right.
The typical days for closing is 30 days. And we got some people that can close faster, some lenders that do underwriting prior to you even finding a home. They can close anywhere from 2 to 3 weeks. You'd be surprised. Even with a loan. But it just seems that NACA is a great program, and you may be able to share more about it. But my only experience was it was taken too long, and the seller declined that particular offer. Sellers look at people, and I'm just going to be honest, and please don't take it the wrong way. Sellers look at people that need assistance as someone they fear to do business with. And so it is in your best interest to have that credit in place and then have your own savings. I'm just to make the process smoother. Okay, what are your thoughts? Yeah.
And what I will say about NACA, NACA, before I was a realtor in 2017 and 18, tried to get a home through them. Okay. The process is very lengthy.
Yeah, extensive.
Let's start off with the good things about NACA. NACA, you don't need a down payment.
Nice.
They got you.
Nice.
NACA doesn't technically worry about your credit. They will tell you what needs to come off of the credit, and it will give you time. Why? Because it's a lengthy process. I have seen several successes before I was a realtor with the NACA program. And in terms of that, they have they are there for you, and if you find other down payment assistance, you can use that for discount points purposes. So even if you do, like if you've applied for other down payment programs, you are allowed to use that money for discount points.
Nice.
So there are a lot of good things with it. The downside is the time.
The time.
The downside is the time. It takes a lot of time. And if you are not where you need to be in terms of your bills, like they look at your electricity bill, it got to be at a zero and paid on time. They look at all your utilities, your credit cards, all of that they look at. Most of the other stuff they don't care about. So you have to be leery with that, but that is an option, a valuable option. To try to bridge this gap between other Americans and African Americans.
I want to talk about that savings. What do you think about that?
So with savings, what can we're gonna come back to savings,
Okay.
but I want to talk about these rent to own programs like Divvy
Okay.
and Pathways and other programs. How do you feel about the rent to own programs?
I think they are a great option. And the reason why I say they're a great option is because if you're not prepared for home ownership, they are opening up a way for you to get there. The only thing is that you got to play the game.
Yeah.
And you got to know the rules. You got to know the rules. My experience with Divvy is a program in which they will purchase the home of your choice for cash. And they will come back and they will let you rent it back from them. And so let's say that rent would have been, if you had not used Divvy, let's say the rent would have been $1,800. Divvy may add another, $200 to $300 on. So that let's say they're going to take it to 22. The difference in the 18 and the 22, they're going to put into a savings account. So when it is time to buy that home back, and they do have a maximum of 3 years, I believe, when I was working with Divvy, they have a maximum of 3 years. So within 3 years of renting, they're ready for you to buy this home. If you do not buy that home within those 3 years, then you lose half of that savings, which is pretty devastating. And so in that 3 years, you say, well, why would somebody not be ready in 3 years? Sometimes we get a little bit too relaxed. Sometimes we never get that credit together. And so you got to know that time is passing. So don't get too relaxed. Know what you signed up for. Go in there with the intention to get it done faster. Honestly, it should be your goal. If you did not have, one thing about Divvy, they allow you to have a bigger debt to income ratio.
Exactly.
Okay? A lower credit score. Okay. And sometimes for the self-employed people, it's okay that you didn't have those 2 years taxes because they can look at your income, your bank statements and things like that. So it's a good segue into home ownership.
Very
good
segue.
So do not count on it to be more than those 3 years. Then you got home partners, you have Landis, you have different ones in which home partner doesn't put a time limit on it. They'll let you rent until you can't get enough. You know what I mean? So, and you should get enough of that because your whole goal was rent to what? Own. And so if you never own, then you're still renting. So the program, just know the rules and play the game the way it's supposed to be and try your best to win by doing it and buying it sooner. You really get into that zone, put those blinders on and get it doggone done. But I love the program. I think it's a good segue. I think it does prey on the unprepared. And most of the time that's us. So it makes it look like they're preying on African Americans or the minority communities. But again, if you take all your emotions out of it, that's the most unprepared community.
So I would say get in there and get the job done.
That's it.
And if you have to, I would rather rent to own than just rent.
Yeah, because at least
I would definitely rent to own before I would rent, for sure.
Yes.
So now we talked about credit. We've given other options. We talked about loans. Let's talk about savings, y'all. Savings. I'm gonna let you talk about it first.
Well, when it comes to purchasing a home, the two things you're gonna need is a down payment and you're gonna need closing costs. And though we do have sellers out there that's willing to help, you got to go in this thing as if you're not gonna have any help.
Exactly.
Okay. So as she said, FHA, your down payment expected is to be 3.5% of the choice home that you choose. So if you choose a 350, just get your calculator out. 350,000 times 3.5%. That's how much they're going to want as far as down payment. Down payment, most down payments somewhere between $7,000 and $15,000. You know what I mean? So that means I got to have that in my account. Then closing costs are right around. They're wanting us to assume them to be around 3.5% too, just to be safe. We better be safe than we better rather be over prepared than under prepared.
Exactly.
So that 3.5%. Down payment and go ahead and say 3.5% closing costs. That's a total of 7%. And so you want to make sure you have that amount. If you don't, what are your saving goals? How do you save? I have a savings plan for me. I think that the average American will spend easily $10 a day, right? Do you go to Walmart by mistake and you go for laundry detergent and you come out with something else?
No, but I do love Starbucks.
Starbucks habit. Starbucks is a definite $10. I spent it this morning, I'll tell you for sure. $10 a day, guys, times 30 days is $300 a month. There is no excuse for everyone base minimal to be saving at least $300.
Yeah.
You really want to be more aggressive if you're trying to purchase a home, but at least $300 a month. And so that'll give you a little start. And for me, another thing that really helped me with the savings, Jana, was to automate my savings. Because sometimes you just can't trust yourself.
Yeah.
You have good intentions, you have a heart, you really want to have these savings, but you're not disciplined enough.
Sometimes you be thinking about other things.
That's it. And so I made my checking account pay my savings account $100 every week, for several weeks. That's how I really started my savings. Okay, I don't want to see a statement. Don't send me anything. Every Friday, $100 from my checking, automatic draft into my savings. And that was really how I got my first bit of savings. And one day I went to the bank and, you usually don't go inside, but this time I went inside and I said, yeah, I want to make a withdrawal. And they said, well, from your checking or savings? I said, oh yeah, I do have a savings. What's in there? She said, you got $10,000. I
Yes,
saved
Lord.
$10,000.
And it is so doable. Last 2 years, I've been doing this program that I guess I just kind of figured it out on my own.
Okay.
And it's called Aggressive Savings.
I love that.
So you go by for 100 days. In 100 days, you can have $5,000 to $10,000 in your bank account.
That's serious.
And what you do, you do day 1 is 1, day 2 is 2, day 3, and it just goes by the days. So that's how much money you put in your bank.
Yeah.
Now, every 2 weeks, that's 14 days. So you add each day up and you put that much money in your account. So if it's day, 37, for that day it's 37. And I will link that. Aggressive
That'd be great.
Savings. We will be starting back up in September. Guys, you do 3 of those, you could have up to $30,000 in 1 year.
Amazing. That's good stuff.
So, and sometimes, I saw a meme this week that had the hare and the turtle. Sometimes you got to be the turtle, but you just got to beat the race.
You're getting there.
Because that race is not given to the swift,
but to the one who endures
but
to the
to
end.
one who endures forever.
That's it. So home ownership is definitely attainable for all Americans. And you just have to get in the zone. I mean, and I think another thing is to have that plan. Don't be afraid to apply, because I tell people, I don't want to apply. It's going to hit my credit. Okay, what's your credit looking like anyway?
Yeah.
You know what I mean? So let's go ahead and let it hit your credit so
And
we
let's
can get
see
a
where
plan.
you're going, where we get a plan
That's
going.
right. Because when you have a map, you got to admit where you are. You are here. It says you are here, and this is where you're trying to go. You got to admit where you are first, and then you got to know where you are. And also this myth: I'm working on my credit. We don't need you to be working on your credit, because
We need to be working on your
we need to be working on your credit. As Jana stated earlier, that the lender has a specific score.
Yeah.
So there's specific things that the lender would tell you to do, and you think, I'm going to pay this old debt. They've been on my back. Sometimes paying off an old debt would really hurt you big time. Not sometimes, it will hurt you big time. And so as honorable as it is to pay that debt, it may hurt you. So let the lender take your application, give you a plan, look at what you need to pay this, pay that, pay this, pay that. Then you're going to get there faster. Don't try to help yourself. Let the experts help you.
And that's what we're in today. Tracy, thank
You're
you
welcome.
for coming.
Thanks for having me.
And I'm so excited. This is my first podcast. So
And she did an amazing job. Y'all call her for your real estate needs.
and in Tennessee, call you.
That's right. Tennessee, call me. Call Jana in Georgia. I am licensed in Tennessee and Georgia.
All right. So this is it. Thank you.
Thank you for listening.